Okay, with chapter 5, we're going to still be looking at inventory, selling it, using cost of goods sold. The only difference is we're going to be looking at mass-produced items, items that we will keep track of in bunches instead of individually like we did in our previous chapter when we were selling more unique goods. So again, I wanted to, this is going to come up, these two terms, again, for this chapter, as well as making sure we can find how to do periodic. So this is a quick review of what we had on last chapter. But remember what perpetual means you're going to update after every single sale. You're going to update your inventory. Your inventory is always going to be up to date, your cost of goods sold. Whereas with the periodic, you're going to update it periodically. You're going to update it at the end of every day, perhaps every other day or every week. You want to keep it updated at probably at least that often, so you know when you have to reorder, how much, and how much stuff you still have left. So to get to do periodic, in order to get your cost of goods sold, because you're not keeping track of it every single time, the only way to realistically do that then is you've got to know these basically 4 items. You've got to know, 1, how much are you starting with in your beginning inventory? And then how much did you buy within that last time that you have calculated your cost of goods sold and that you put that stuff on your shelves? Did you have, and then of course net anything that you have taken away and returned. That's going to tell you when you have your beginning plus your purchases, it's going to tell you how much you have available to sell. And then the third thing, the final thing you need to do to figure out what you sold is count up what you have left. Then you just do the math, what you have available. So 100 items minus what you have left, 20. That means you sold 80 items. And then you just take that times the price that you bought them for. Now when we do mass produced, we're going to get right into an example to just see how this works, because it's the easiest way, but we'll just briefly go through the terms. You probably have heard these terms at some point before in some kind of a business or some type of a situation where you've heard of Fifo. Fifo meaning first in, first out. So that inventory that you bought the very first day, when you're dealing with mass produced, you don't really know which inventory you're selling. Think of it like 2-liter bottles of pop. If you have 10 bottles and then you just went and bought 80 more, and then you start selling those, you have no idea which one, unless you specifically marked them, and you wouldn't need to do that, you wouldn't want to do that. You don't know if you're really selling the ones that you had before or the ones that you just purchased. And there could be a difference. The ones that you had before may have cost you 60 cents a bottle. The ones you just bought may have cost you 65 cents a bottle. Now that doesn't sound like a lot, but over hundreds and hundreds of bottles, that starts adding up. So how do you know which one to take away? Is it the 60-cent one or is it the 65-cent one? Well, this method solves that for you. It says, no matter which one you sell physically, we're going to assume it was one of the beginning ones, the first in ones. And then once we sell those 10, then we'll start selling the next 80. So that's what first in, first out does. And basically what it's going to end up having is if you have first in, first out, that means those items that are the last ones purchased are the ones that are going to be in your ending inventory. Because those were the last ones that come in. They're not going to be the ones that are sold. So all your ending inventory is at the most recent price, while your cost of goods sold was all of your earlier stuff at the earlier cost, which may have been slightly different. Last in, first out, Lifo is just the opposite. You work it the same, it's just you go from the other end. The items you purchased the most recently, so in my example up here, we had our beginning of 10 and then we purchased 80. The first items we sell are going to be of that 80 batch, and we're always going to have that beginning items still in our store. This one isn't as popular because you're always keeping those beginning items. You're never getting those for cost purposes, cycled through. So your ending inventory is always going to be at that old price. And unless you sold through all of your inventory at some point, your ending inventory could be 10 years ago, feasibly. But your cost of goods sold is going to be really up to date because it's going to be the items that you just bought. Those are the items that you're just selling. And so your cost of goods sold is going to be real close to actual, where your ending inventory may not be so much. And then a real good way to solve that is just to do the average method. The average method, it's always moving. It's never exactly what you bought it for. It's going to be the average of everything you have. And all you've got to do is just add all of your costs, add the total cost of all of your old plus new inventory, add them together, and then divide by how many units you have. So let's go ahead and just jump into an example and see how this works. And this will be similar to how your homework questions are and the ones that we do in Connect in part 2. All right, so you'll want to, you'll want to pause the video and pull up the 2 items that I have if you don't already have them pulled up. You'll have a inventory worksheet. Yours will be blank. I've already begun to fill in mine with some of our answers. And then you'll have this number 23. So what we have going on here is we have some opening inventory. We'll call this maybe beginning inventory that we already had on hand. I'll just rename this to beginning so there's no confusion. So we have our beginning inventory. And then we bought some more stuff in April. And then our first sale comes along and we sell some units, buy some more, and then we sell some more. So what we're going to do ultimately is keep track. And I want to be able to answer these 5 questions when we get through. I want to know how much in sales did we have? That one's the easier one. What is our cost of goods sold? So then therefore, by taking the difference, how much profit did I make? And then how many items do I have in my ending inventory and what's the cost? And while we're doing that, I want to be able to fill in the journal entry as well for each of the 2 sales, because that's going to be a good review from our previous chapter. Remember, we're going to have at least 2 journal entries every time we have a sale. We're going to record the sale, and then we're going to record the inventory leaving the store and counting that as a cost of goods sold. Okay, so we're going to do FIFO first. We're going to do first in, first out. And I had said that this one was our beginning opening inventory. So what we want to do is put this information into my Excel sheet. And since it's beginning, it's not really a purchase. You could put it here as a purchase. It's not a big deal. But what we are going to do is put it over here in our ending inventory. So we had 100 units and they cost me $3,000. Just simply put those numbers in, and then I just did an easy Excel formula that took, okay, what is the average price per unit? So taking the 3,000 divided by 100 units, and we get that each item costs 30 bucks a piece. And I'm gonna need to know that as the business owner, so when I go and sell them, I'm gonna be selling them for more than 30 bucks, and then it just depends on how much profit am I going to want to make. 50% profit, that's going to put me at $45 sale price. It all depends on how many units I sell, how much in sales transactions I'm going to get over the course of the day. Okay, so then what we're going to do with FIFO, we have our next purchase. So we don't think 100 units is going to be enough, so we go ahead and buy 300 more. All I'm going to do is come over here and put it into my purchase, put in that new amount. So we've got 300 at $9,300 total. And then when I do the math, it comes out, says, okay, these items were slightly more expensive, 31 bucks a piece. And then in my ending inventory, notice what I'm doing. I'm keeping each one separate. Do not combine them, not for FIFO and LIFO, because I want to know which ones are the first ones in and then which ones are the last ones in. And that's going to come into play next. When we go into 4.4, we have our first sale. I'm selling 350 items, and then what I'm selling them at, and I could have put this at different ways, but this is my sale price. So I'm selling them for $14,000 a piece. And if you just do the math, that better be more than 30 bucks. So let's just figure out what it is. 14,000 divided by 350 a piece. So I'm selling them for 40 bucks each. So a decent markup. When I come down and do a sale, what I'm going to do is I'm not going to put it in the purchase. What I'm going to do is put it into my cost of goods sold. I'm going to put the full sales total over here by itself, because the whole goal of this worksheet is to figure out, well, what did that sale actually cost me in goods? This is where the new stuff comes in. So we're doing FIFO. I'm selling 350 items. Well, when I'm selling 350 and I'm doing FIFO, I'm selling all of these guys first. The 350 first in, first out. These 100 all come over here and are deemed to be sold. So then I have left 250 to get to that 350 that I sold. 250 that I got to take out of here at this price. So what I'm going to do is I'm going to take 250 at $31. So these two are my actual numbers. These two I actually need to fill in. This is what I'm going to use as my formula. I'm going to say, okay, 250 items at 31 bucks a piece. So those cost me that. The total 350 items that I sold cost me $10,750. And remember, what I brought in was 14 grand. So I have a nice little profit there. Then I want to come over here and I want to update what I still have in my inventory. These guys are all gone. And then I just used 250 and I sold them of that 300. So all I have left is 50 items and they cost me 31 bucks each. So I just do the math, 31 times 50, and I get what's still left. Now what I had over here is I wanted us to go ahead and fill in what was the actual journal entry on this 4.4 sale. That's what I have out here to the side. Our debit, what did the business get? We could have put cash here or AR. Since I didn't tell us what exactly happened, I just put AR. We got an account receivable from our client for 14 grand because my credit being sales revenue. And then I figured up by using my chart what my cost of goods sold was, the $10,750. If I didn't do the FIFO, I wouldn't have known what my cost of goods sold was. I could have came up with a pretty good idea, but it wouldn't have been the exact that we need to use in accounting. So debit, cost of goods sold, credit, inventory. Just like what we did in chapter 4. Now we're doing it by doing FIFO, LIFO, and average cost. All right, let's continue this example. We have 50 items left, so we need to go back and buy some more before we have our next sale. So on 4.6, we buy 500 more items. Okay, so when we buy 500 more items, we put that over here in our purchase category. 500, and this time I know the total cost. The only thing I don't know is the cost per unit, and that's where we just use our formula, taking the cost divided by the number of units. And once I have that, I'm going to bring it straight over and update my ending inventory. So I still have the 50 items. I just bring those straight down. And then what I have now is my brand new stuff, my 500 items that I just bought. My final sale, I'm selling 525 and I'm bringing in $21,000. Let's see if our sale price has changed. Remember, it was 40 bucks a piece. I think it's still the same. If we take the 21,000, spread it out over 525 items, yep, I'm still selling it for 40 bucks a piece, which makes sense. People don't change their sale prices on a daily basis, except for maybe like a gas station. Okay, so if I'm selling 525 items, I need to figure out what's my cost of goods sold. So when I'm selling 525 and I'm using Fifo, these guys are the first ones to go. I'm updating my cost of goods sold. 525, the first 50 are basically just this line copied. All of it gets carried over into being sold. And then when I do the math, if I sold 525 and I just took care of the first 50, that means I have 475 left to sell. And those 475 cost me 34 bucks a piece. Those are the two numbers that I manually fill in. And then I just do the formula to figure out 34 each times 475. I get that amount, and then I add up everything to make sure that I have calculated the right amount of sales. And yep, I have 525 here. It cost me $17,700. My sales total over here to the side to remind me what I actually sold. I sold them sticker price for $21,000. And then update my ending inventory. Out of these guys are gone. I sold 475 of these, so I'm down to only 25 left at 34 bucks a piece. That's how I get the 850. Now I can begin to answer. Well, let's first do the 4/8 journal entry. This was my sale price, so I need to record that I made a sale. Made a sale for 21 grand. And of the 21 grand, it cost me 17.7 based on my figurings as my cost of goods sold. Now I can answer I got everything I need to answer the final 5 questions. My total sales, I added up my sales total, my column here, the 14 and the 21. So I made 35,000 in sales. My total cost of goods sold, I did the same thing. I added up my 17.7 and the 10.750. When I add those up, I get the cost of goods sold, 28,450. My gross profit, I simply just want to combine these two. Take what I sold, 35,000, minus the 28,450. And that's what I get, how much money I made on the 2 sales. And then finally, number of ending units and the total cost of my ending ending inventory. Well, that's simply just what I have here. I have 25 items left, and they cost me $850. Total cost of goods sold, or the total price per unit, 34 bucks. I didn't really need to put that on this one because I already have it up here in my actual. So this is just my final answers for number 4 and 5. That's why they're in bold. Okay. Now for Lifo, so what we're going to do is we're going to do the same thing. We're going to skip past that periodic purposes. We're going to do an example like that in the Connect. But for Lifo, I'm not going to go through the entire thing, but I do want to show you the difference between Fifo and Lifo and do a quick comparison. All right, so with Lifo, I had my beginning inventory. We start out exactly the same. So just start a new sheet. Just practice these as I go along. That's the easiest and best way to learn it. I know it sounds a little bit more work, but you actually do learn it a lot quicker when you put it pen to paper, or in this case, into Excel. So I go back up to my main instructions. I had beginning inventory of 100, 3,000, same thing starting out. Exact same thing for April 3rd. No change between Fifo and Lifo so far. I still have the first items and the second items. The change comes on 4/4. When I sell 350 items, instead of selling these first and then these second, I'm now selling these first. So out of the 350, I'm selling all of this bottom purchase, the second one. So that whole line just gets transferred down because I'm selling more than what I even bought. And then I still have 50 left that I have to sell out of that first batch. And then 50 at that price, 30 bucks a piece, will tell me how much it cost. So when I come down and added everything up to get ready to do my journal entry, I now have the 350 items, still the same number of items. The only difference is they now cost me $10,800 instead of, remember before it was $10,750. So not a huge change, but over time it starts to add up. So an extra, I basically, my profit, because if you'll think about it, think about sales minus cost of goods sold. The higher number that your Lifo, that your cost of goods sold is for Lifo, that's going to cause your income then to come down, because this is like an expense. So the higher your expense, the lower income you have. So even though we sold the exact same stuff, just depending on the method that I use, depends on if my income is going to be a little bit higher or lower. Because in this case, the price was rising. Now, it's not always the case. Sometimes the prices are going to go down a little bit. So it doesn't mean that Lifo is always going to give you a higher cost of goods sold. That's not the case. It is the case if your prices are continually going up. When I get all the way finished here, I wanted to show you the comparison to the final numbers. I would recommend you to go through and finish the rest of these Lifo. But I wanted to compare my gross profit for the ending of Lifo was $64.50. Note that since the prices were going up, they were $30, $31, $34 for each item as I was purchasing them. My gross profit, $64.50 compared to, it was just a little higher over here at $65.50. It's not a huge difference. But if you were doing lots and lots of sales, that could add up pretty quickly. All right, we're going to slow it back down a little bit now for the average cost, because the average cost is just a bit different. Nothing real hard, just a little different. Fifo and Lifo are almost exactly the same. You just go with the opposite item. So with the average cost, we're going to start out, we still have our beginning inventory, so I can take it off my purchase. Still have my beginning, so I have the 100 items, nothing new there. But when I make my next purchase, this is when I have something new. Notice I don't have 2 items anymore. I just have the 1. I have the 1 total. So this 400, it simply comes from the 100 that I had plus the 300. So I have 400 total units. For average cost, we total up everything. We do the same thing here. Take the 3,000 plus what I just bought, total inventory cost. And then what I do is I need to figure up my price per unit. So I just do the formula. 12,300 over 400 items tells me that each item costs $30.75. None of my items actually cost $30.75, but averaged out. You might look at this and say, oh, well, the average price, it should be $30.50. Well, that would be the case if we had the exact same number of units, both of them coming in. But we have more items at the higher price, so therefore our average is going to skew to the higher end of the two differences. Now, when I get ready to make my sale, still selling 350 items, I'm still bringing in $14,000. It's just my cost of goods sold is going to be slightly different. I'm going to be using this number to get my cost of goods sold, and I'm only going to have one amount. Unlike with Lifo, or Fifo, where I had two different batches coming in. Well, now I only have one batch. This is my only batch, all of it in one number. So I come down here and I put the 350 that I sold times the $30.75, the average cost, and then I figure up my total cost by just doing the multiplication, 350 times 30.75. And then what's left, that's pretty simple. All I got to do is just take the 400 less what I sold, and I have 50 items. This number just gets brought down. I haven't added anything to it, so there's no change. Those 50 items that are left still cost $30.75. So that's my new ending inventory. Now on 4.6, when I buy 500 more items for a total of $17,000, I'm going to do the same thing that I did on 4.3. I'm going to put those 500 over here at their full price, knowing that they're 34 bucks a piece. But then when I come to the ending inventory, I'm going to start combining 50 plus the 500. The 1,537.50 plus the 17,000. And then note I get a brand new average cost. My average cost, taking the price divided by my total units. Notice we're really skewed to the $34 side. We're almost up to $34. We had a few items at the cheaper product, but most of our items are of the more expensive, so that's why we're way skewed to the 34 to the higher side. Now when I come to 4.8 and I sell 525 items, I'm no longer going to use the $30.75. That's not my average cost anymore. With the new stuff, my average cost is $33.70. So that's what I'm going to use as my price per unit. So when I take that price times the 525 that I sold, this is what I'm going to get for my total. And then what I have left, I only have 25 items left at $33.70 a piece. And then I can fill out the rest. I can get my total sales, cost of goods sold, and then taking the difference. So the cost of goods sold is just these two added together. Gross profit, the sales minus my cost of goods sold, give me that. And then simply I have 25 items at $8.45. And then we could compare. These numbers are going to be real similar across because there wasn't a lot of fluctuation. So when I have 65.45, that was really close, within $100 of this guy. And then with the Fifo, it's actually, I think it's really close to the Fifo. Yeah, we're only within $5 of the Fifo. Fifo was 65.50. This one was 65.45, and that's mainly because what I have in my ending inventory is a lot closer to the Lifo price. So therefore, it's going to be very similar to Fifo. I have a lot more of the last in, first out. I have the $34 items. Well, now with the average, they're just down just slightly. So it's going to be real similar to the Fifo in this case. Okay, with that, it was pretty short and sweet. We're going to now switch gears and go into the Connect and do a couple practice exercises. So with that, we will stop here.